Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso, and today we're going to be talking about why you should use it or lose it.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome. Glad you guys could join us today. This episode is specifically for people, right? It's maybe somebody that's on the fence of IBC, maybe a refresher, right? You've had a policy for a while, and maybe you've had a policy for a while and you've been hesitant to use it. Today's episode is just for you. And Anthony, I know that you have been excited. You've been running around this office for 2 days talking about this episode. I know you're excited, man. Tee it up. Tell these guys what they're going to be in store for today.
Well, you know what? This is coming to me because I've had some clients that they're hesitant to use their policy.
Yeah.
And again, we have more experience and we can kind of see what they are using, what they are missing out on it because of their misunderstanding and or fear.
Mm-hmm.
Right? So we've been wanting to do this for a while, but then I know it's kind of a short podcast.
Yeah, it could be.
But really, then we came to the conclusion that it's an important content,
mm-hmm.
right? Whether it's short is great, but if we need to go longer, then I'll just fill it in with making fun of you.
Yeah,
which, I've been realizing, I haven't been doing much of that lately.
That's because you're not funny.
No, that's not it.
Yeah.
I think it just comes naturally, and I think we just been focused on producing good content. I need to make sure that we allocate some of the resources to your hair and your favorite movies. But
yeah. Anthony, so why do you think some people are a little hesitant to maybe use their policies?
What I've seen, like I have some clients that have cash value, but they're not using it, right? And what they're doing is they're buying assets in cash or outside their policy. And when I've talked to them, they're like, well, you know what? I don't want to have to pay interest to use that money. And what that tells me is that there's a disconnect in the understanding. They're missing the point about infinite banking, but also it means that they don't understand. So that's kind of what we wanted to do today is kind of push people. You got this great tool. I mean, it's like you have this Swiss Army knife.
Yeah.
But you're only using the tweezers, right? But there's a knife, there's a file, there's a saw. I mean, mine even has a toothpick. I mean, there's like so many things that you can be using this tool for, and I want to make sure that people understand what they are missing.
I would agree with you there, surprisingly. Yeah. And I think it's because the policy, right? If you go back to Nelson and what he says in his book is he says infinite banking is a paradigm shift. It's almost the complete opposite of what people are told to do with money up until that point in their life. And so what people are typically told to do is put money over here and let it sit. And that process of putting that money to work is a little bit foreign to them. And so, right, sometimes we need a little education, maybe a little nudge or push to kind of get that money moving. So that's what hopefully today we're going to discuss and help out with.
I'm excited of what we're about to share here. In fact, if you noticed before we started, I actually turned the volume down on my mic.
I did notice
that. All right, because I have a feeling I'm going to be pumped today, and I might get a little excited.
Yeah. So I'm going to give you guys kind of a quick refresher on infinite banking. Actually, I won't take the time, but what I'll do is we'll put the link to the 12-minute infinite banking overview in the show notes so you guys can go back and watch this. But one of the things that we're going to be talking about a lot is going to be borrowing against the cash value of your policy. And again, right, this is not you're taking money out, but it's a loan against your cash value. If you guys need a refresher on that, make sure you go back and watch that video in the course. Anthony.
Yes.
Man, take it from here. What do we got?
Okay. The key to the way we use infinite banking is that we're never going to break the compound interest curve. And we're going to do this by stating an example. And we're going to use some numbers here, and I know a lot of people might be driving or exercising or whatever you're doing. I'm going to try to keep it at a high level, and we're just using some round numbers so we can kind of understand the theory. Okay. Now, let's say we look at an illustration, and at age 70, the cash value says $1 million.
Okay.
Okay. Now, what we're going to do here at age 40, we're going to buy a rental property for $500,000.
Okay.
We're going to put as little down as possible, and we're going to get a 30-year fixed mortgage for the rest.
Okay.
Okay. Now, what we're going to do here is we're going to use the proceeds from the rental income to repay the loan.
Okay.
Now, this piece is key because I find when people say, well, I don't want to have to pay interest. Remember, you're not paying the interest, your tenant is.
Mm-hmm.
And you're going to have some vacancy. And so what you just don't repay the loan that month. Okay. And you're going to have some good months or some bad months, but whatever the cash flow from that property is, we use that to repay the property. Okay. Now, so let's say, Cameron, that we repay the loan at some point.
Okay.
All right. So we bought the house at 40, and now we're at age 70. We repaid the loan. The cash value on the original illustration says $1 million. What, assuming dividends don't change, right? What should you expect to have in cash value at age 70?
$1 million.
See, that's where I think people, you have $1 million and one cash flowing property,
Mm-hmm.
right? Where I think people get, but you see here, you're going to have that $1 million anyways, right? But now by using the policy, we have $1 million plus we have $500,000 in equity. But this is assuming over 30 years, 0% inflation.
Mm-hmm.
Okay. You think that's possible?
No.
No. Me either. If any, and there's going to be some sort of appreciation / inflation. Now, let's say it appreciates 2.34%. Okay. Now, what that means is we don't have that $500,000 house is now is doubled and worth $1 million. So we still have the $1 million in cash value, and we have $1 million in equity in the property. But there's more.
No.
There is more.
No, there's
okay,
not.
right?
There can't be.
What we haven't talked about is this is a cash flowing asset,
Mm-hmm.
right? We don't have a policy loan. We don't have a mortgage. So now that cash flow from that property is coming directly to us. Now, I've estimated that on that property at $500,000 with no mortgage should be cash flowing about $35,000 a year. So you got $1 million house, $1 million cash value, and $35,000 in cash value in cash flow a year. And again, that 35 was assuming 0 appreciation, 0 rent increases.
Mm.
If we simply use, again, the 2.34%, that's going to double. So you're not going to have 35,000 in cash flow. You have 70,000 in cash flow. Now, one thing I think is interesting is if you wanted to take 70,000 from your investment account, right?
Yeah.
And without running out of money, you know, the typical rule now is you can take 3.5% of your balance each year. So what that means, if you're getting 70,000 a year, that's equivalent of having $2 million in an investment account, right?
Yeah.
But there's more, right? We should have paid off our down payment or repaid the down payment in 11 to 13 years, okay? But let's say we do it over 15 years, okay? What that means, Cam, is that from year 16 to year 30, we've collected about 10 grand a year in cash flow.
Okay.
That's an extra $150,000, right? We're not even talking about what we're using that money for. Couldn't we buy another house?
Yeah.
Right? And what we talked about here, again, this is only one rental property. Couldn't we buy another one? And then we can use that cash flow to repay that back even faster.
Mm-hmm.
So the point here is, here's where I think people get caught up with infinite banking is they focus on the cash value. Well, hey, I'm only going to have $1 million. Maybe, they say, well, I can do better doing something else. To be honest,
you should be able to.
Yeah, you should. But we talk about life insurance. The way we use it is that this is an and asset. Mm-hmm. So you're going to have that $1 million, and you're going to have some assets outside. And oftentimes when I meet with a client, I tell them, if you follow what we're doing, you should have more assets outside the policy than you do inside. Mm. So that $1 million is your floor if you do nothing. But if you put that money to work, get over the fact that you got to pay interest. Mm-hmm. Okay? But realize that $1 million is going to be there whether you use it or not. Mm-hmm. So why not use it?
Great point. And what I would say is part of our process, right, when we are talking to clients and somebody that reaches out, is we'll show them an illustration, but we don't leave it there, right? And that's probably one of my favorite parts in this process is we show them what it actually looks like when we start to put this money to work, and that's what Anthony was highlighting here. If you guys have a policy, if you guys are on the fence and you're wondering what that second part of it looks like, feel free to call us. Reach out, right? Schedule a discovery call. We'll walk you through the process. We'll show you exactly what that is because that second part of it, I think, is what's often missed when somebody's looking at IBCs. They get so focused on the illustration, which in reality is, right, we're going to have so much more assets and we should be creating cash flow outside in addition to that policy. So feel free to reach out if you guys have questions.
Use it, don't lose it. And make it a fantastic day.
Take care.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.